Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the Forex market. So yesterday there was a drastic shift in sentiment of the market. You could see by the performance on intraday charts, everything has changed in the blink of an eye. And what is more interesting is that I have just checked across the board and searching some headlines or something, the reasons for that action. And the only explanation that actually have been given is just investors are preparing for a hawkish Fed meeting for minutes publication. So this is very a kind of explanation, so very curious explanation, because everybody knows before that Fed minutes probably will be hawkish just based on the comments that come from the Jerome Powell. It's more probable is that in this period of time, in the first few weeks after the holidays, market remains tricky. It's just because investors start forming new investing portfolios, rebalancing the assets, and that could lead to the drastic and sharp action on the markets across the board. And this makes the analysis and the trading process rather difficult. So because the same tricky action we also have got on the dollar. And if we take a look on the dollar index, it was absolutely outstanding sharp rebound right from the bottom. So just we have said on the possible downward continuation, a bit deeper drop, maybe that market could erase and free drive pattern, grabber pattern here. But yes, here was minor wash and rinse of these lows, but mostly price action stands around the same lows. And next day we've got sharp rebound. So in such circumstances, it's of course it's very difficult to take the position against the dollar, and it's also currently we definitely can't call for that and to go against this action, especially so anticipation of the so-called hawkish Fed minutes. And from that standpoint, I hope that probably the action that we were considering and we're waiting for some big action here is starting. So that's just a hope currently. Yes, later we probably and hopefully will get some patterns. One of them might be this minor double bottom here. Later maybe it will be kind of the wider hand and shoulders or something of that sort. And I hope that this is it. But at this point, what I do know that, well, we can't call you to take the position to the upside on the dollar, or let's turn back to the euro. We can't call you for taking position to the downside by the euro. So although we have the setup in place, so you could decide by yourself, but definitely currently we do not want to go against this drop, especially as we get the same confirmation on the dollar. What is more interesting, guys, it's very interesting, is that we have rally on the gold market simultaneously with a rally on the dollar. This usually happens when some big geopolitical event stands on the background, when the geopolitical risks are rising. This is not financial background. This is mostly some background where investors start searching for the safe haven. They are simultaneously buying dollar and they are buying gold. I suspect that it also might be, if we will stand aside from the Fed minutes, as maybe some problems in the Senate. When yesterday, if you have just watching for that, you're monitoring this topic, they were not able to elect the speaker. So McCarthy actually has lost the 3 rounds of the elections, and currently they can't choose the speaker. Maybe that brings some uncertainty in the political sphere. So lots of rumors stand around it, right up to the rumor that maybe Donald Trump will be elected as a speaker. We will see. But all this stuff also brings some uncertainty. And maybe this is one of the reasons why we see this performance that we have currently. But whatever it will be and whatever stands behind it, so currently I just could say the two things. The first of all is we don't want to go against this drop, especially when we see the performance on the gold market or on the dollar as we have right there. And second, taking the position to the downside here is possible. It is not. It is actually correct from the technical point of view, but it is a bit tricky, and that is choices up to you, because it's well, if it fits to your mentality, to your psychology, so it's no problem. So you could consider taking even short position here. How it could be done? So take a look at the 4 time frame chart. Here we have big collapse recently, and as you can see, this totally suggestion of the butterfly has been erased in the blink of an eye. Market dropped back to the lows of this patient, and take a look here. It might be we could get the grabber right at this point. So just keep watching what will happen. The pairing of the grabber will give us more confidence that actually we could get downside continuation. So I will show you the CD predictor. Currently we do not have it, but if market will close below, I could even tell you the level. It will be by the FX choice chart is approximately 106.02. So if market will close below 106.02 on the 4 time frame chart, we will get the grabber here, and this will be good background for starting downward action. On the hourly chart, we also have general bearish combination, because we have downside drop, ABCD retracement to the agreement resistance, combination of the OP target and the 618 level. So by pure technical background, this is level that you can consider for taking the position with the stop slightly above it, and just watch what will happen. The pairing of the grabber will be additional confirmation, additional confidence to the stop, and then watch what will happen. Risk relatively small, so here we have 106.15, 106.40, currently market 106.10, so it's approximately 30 pips risk for this trade, maybe slightly higher. It's also interesting how actually this performance have been erased. So initially we actually were considering bullish background, just because take a look here as we have the fast reaction, so tight consolidation, market mostly already was prepared for upward action, but immediately this has happened. So this is some important event has happened, something that well, can't predict with the technical analysis. Well, even this bullish action had been totally erased. That's what we have currently on euro currency on the background. That's why this is actually the reasons why we do not consider taking any longs by far. And from taking the short position, I already said that in general setup stands in place, and if you are ready psychologically for that, it's no problem for you. Well, you could consider this setup that we have just discussed with this ABCD pullback. Actually, we have got a triple to sell pattern here, and you could consider possible taking the position right there.